Good morning, family. Happy Tuesday. So for today's session, guys, and basically so far here this week, what I'm focusing on is what I would call reversion to the mean trades. Now, only concept you guys really got to understand is that the market basically does one of two things. We move away from the 21 period EMA and we move on back to it. So think about, guys, a market in a really strong uptrend where we're above that 21 and all the momentum here is to the upside. Is a general statement. You got to be really careful shorting the pullbacks to the 21. Right now, of course, you can make some money, you can sell some calls, you can buy some puts, and you can make money on the reversion back to the 21, but you got to be careful about getting rid of those short positions the closer we get to the moving average, because the probabilities lean towards that thing bouncing right back in your face. So we can take the same concept here from a nice uptrend, and the same concept applies when we're underneath the 21. We can make money playing the reversion back to the mean, but we got to be careful as we get closer to that 21 because the probabilities are we're going to hit right back off of it and make another move back to the downside. And that's all the market's been doing here, is basically just obeying those rules, even though things have gotten pretty ugly. We move away from the 21 and we make the reversion back to it. We move back away from it over and over and over again. So the reason I'm getting this video out to you guys a little bit early this morning is just so that everybody's kind of keeping this in mind, that we've gotten a nice couple of days of action to the upside here. Take a look at the futures and still looking pretty good, but we need to be careful just in case all this is here is a reversion to the mean. We can make money on the move back to the 21, but be careful the closer we get. So in this kind of, choppy back and forth environment, what's been working really well, guys, is utilizing option selling strategies, whether it be a call credit spread or a put credit spread on these reversion to the mean trades. An example of a call credit spread that we did is Netflix. Making a move back to the 21, we take advantage of all the call premium coming in and short those 520 calls of the call credit spread. Then we get to collect the premium on the way back down. Last week, I did the same thing here on the SPX. As we started to pop a bit, I sold calls up here, I believe at 34.50. Collected all of that premium. Now, when we push off of the 21 and we start dumping to the downside, we can look to take advantage of the same thing with the puts. As we're pushing away from the 21, the puts are exploding in value, the implied volatility is through the roof, and we got a good window of opportunity here to short those options of the credit spread, taking advantage of all the crazy premium. That little moment of opportunity there allows us to go further out the money than we usually could and still get a really good risk reward. And as soon as the stock just simply holds up, the implied volatility crashes and all that premium comes right into our pocket. So this week, guys, yesterday closed two different sets of put credit spreads on Amazon, basically doing the same thing here. Taking advantage of all the put premium coming in as this thing's pushing off the 21 to the downside. And then when the selling volume begins to dry up, when we can see kind of strength across the board, we threw on a couple of put credit spreads. So we can show you guys the orders here, and if you follow me on Instagram, I posted screenshots from Thinkorswim of the actual orders. But the first one that I put on here, guys, on the 21st, taking advantage of the big dump down there, was a put credit spread selling the 2,800 puts. Sold that spread at about $2, was able to close that pretty early into yesterday's session, bought it back for about 36 cents. Then on a little intraday dip, once it again entered a put credit spread, sold the 29, let me see, what did I sell there? On Amazon yesterday, sold the, give me a second, guys, Amazon yesterday, selling them at, $29.50. And again, I posted those on the Instagram. So $29.50 put credit spread, sold that at about $2.60, bought it back not that long after in the afternoon for about $1. So taking advantage, guys, of the reversion to the mean, and mainly on that first trade there, really taking advantage of all the big put premium that's coming in as we pushed off of the 21. We can collect a lot of quick premium as the stock moves back to the 21, and at this point, I'm considering the potential here, if the market, if the indexes, if Apple, if Amazon, etc., begin to kind of lose some steam here, taking advantage of all the big call premium out there and going with a nice deep out the money call credit spread, looking to do the same thing, collecting premium if simply Amazon just starts to chop around a bit, or even if it keeps going higher but just slows down a bit. you're going to get that IV crush and all that premium coming in. So a couple of great trades there yesterday, guys, on Amazon. At the moment, I still am holding my put credit spread here for October expiration on Spotify, and we do got some Tesla here. So thankfully, guys, was kind of using some good risk management yesterday, and I did close one of my put credit spreads here on Tesla, which was a 1450 put credit spread for this Friday's expiration. Now, regardless of whatever happens here for the rest of the week, I was able to get out of that for a 5-cent loss on the spread yesterday, taking some exposure off the table, right? In hindsight, great idea, but even if Tesla gapped up this morning, it's still the right decision, at least in my opinion. So I am still holding, guys, a couple of put credit spreads here. I'll give you a look at those. We've got this Friday's expiration, 405s. So these suckers right here, basically living on the edge. But at the same time, I do have a butterfly out here at 400. Now, I'll be the first one to say, guys, I'm not really experienced at butterflies. I'm trying to learn them as I go. But the mindset here was that I put this on yesterday for about 3 cents, looking for what I call a cheap insurance policy in the event that Tesla does some craziness like this. So, of course, if it rallies here today, I'm in good shape with the 405 put credit spread. But if we do end up rolling over and kind of chilling near 400, I got an order set here to lock the butterfly at $1. Now, I don't know if I'm dreaming. Again, not much experience yet, so learning as I go and taking notes, but I bought it at 3 cents. I got an order to get rid of it at $1. We'll see if that's even possible. But then the other spread here, guys, on Tesla, which I'm really not all that worried about, is October 16th out here at 380. And the nice thing about Tesla is kind of regardless of what happens here, made some good money on Amazon, been making some good money kind of day-to-day basis selling options on the SPX. Spotify's in great shape, been moving the ball forward nicely. And, these trades here on Tesla turn into L's, not necessarily going to disrupt all that growth we've made here. So I will keep you guys posted. Basically going to keep an eye on Tesla today, watch the fireworks, and kind of see if the market loses some steam here to the upside, and maybe look to sell some calls. We shall see. Wish you guys the best of luck today. If you haven't already, go ahead and subscribe, and I'll talk to y'all soon.